Hello and good evening everybody, and welcome to Ask the Trader February's edition. The month has just spun through so quickly, and tonight it's the usual format, and also just going to say a big welcome to those watching the recording of this at a later date. But the usual format is, we talk, as you can see on the screen in a second. We're going to have a brief market overview first, go through some announcements, and then it's up to you. This session is all about you asking me questions, so I hope you're ready with them. We've got some pre-sent in ones, but I'm hoping we can pad it out with some further questions. So let's get firstly into the overall market, what's been going on assessment. And let's start first of all with nat gas. We're going into commodities first, and nat gas has been one that's been talked about a lot over the last few weeks. A lot of questions coming my way saying, is it now time to buy that dip and the price go up there? It's been down 80% from those highs, so a really big fall, and today it's up about 8 or 9%, so a big day there. Maybe it's the FOMO trade there. People think it's gone down so much that it's a chance to buy in and push it on back up, maybe into this 5-6 zone, but really still it can still go lower, so don't discount that out either. But that's one to watch. And then crude oil, this is my setup. Generally it's been weak over the last few days, weeks, and you can see here in the top left, price has been trending on downwards on the Renko chart. Some information at the bottom there to help make that assessment, and in the bottom left we got the volatility index. It has been down but just picking up, and that's an inverse relationship I look for to the price, so that's telling me it's bearish. And this guy here, well, both of these guys are currency baskets weighted for oil, and if they're down, normally oil is down as well, so there's a strong correlation to those. So oil looking weak at the moment. A couple of commodities that have been doing well on the flip side, it's over in the softs area. Cocoa shooting on up, breaking up through that zone there recently, and on the right hand side, sugar also looking quite strong. Gone a bit quiet the last couple of weeks, but has been a strong performer. And then into currencies, Forex, currency strength meter here on the right, the longer term currency strength. As you can see, Japanese yen up the top there at the moment has given back some of that strength on the last few weeks. As you can see, it's been a bit bouncy in its performance, mind you. US dollar getting stronger, that's the important one to watch out for there. No others really hitting the radar. Australian dollar just starting to fall off. That's in the longer term. In the shorter term, you can see that weakness in the Australian dollar now creeping in. The pound had been strengthening, just pulling back, and you can see right up the top there, US dollar getting stronger. Now over to cryptos. I like to use this fear and greed index. It's on the website alternative.me. This guy here gives you an idea of how the feel of the crypto market is, and at the moment it's in the greed sector, so that is telling us that most of the participants are bordering, as you can just see, bordering on there the bullish side of things. But if you go to the Bitcoin chart, the recent pullback at the moment and struggling to get through that high zone around 25,500 there, and you can see it's just pulling back within those trend lines that I've drawn on there, and you got to stop around about 23,000 and then 21,500 in there. So that's the crypto world. Over to stock markets, S&P 500, and again of late, and it's highly correlated with the crypto performance as well, this one, as is most stock markets, pulling back down there. Last few days, seasonality, it does get a bit weak now for the next few months before starting to strengthen again into the rest of the year. And then the commitment of traders, large speculators, I'd expect this to be moving in line with the price to confirm the action. At the moment it's looking weak, so weak to neutral, so yeah, there's some weak bearishness there. And at the bottom, volatility, inverse relationship. As you can see, as the volatility of the VIX goes up, the price comes down, so that's supporting that current point of view there. So looking weak there in the S&P 500, but a couple of, well, 3 indexes that have been doing particularly well that I've been following: FTSE 100, the South African 40 there, and the DAX 40, all, as you can see from those charts, doing particularly well. And we've got, let's move on to the stocks, and you can see there, this is a month look back over the last 20 odd days of trading, and you can see it's a bit of a mixed bag, pointing out that energy has been weak. Energy minerals sector mostly red there, no real standout green sectors, sort of mishmash of winners and losers. You can see Microsoft up nearly 5%, Google down nearly 7%. Apple, Nvidia also doing very well for themselves, and big winner, I suppose, going down into the bottom right hand corner, Tesla up there 45%. So interesting performance in the stock market, but as you can see, reds, greens probably neutralise each other, and that's why at the moment it's feeling pretty flat and stayed. So that's the brief market overview outlook. And announcements, are there any announcements? Nothing special at the moment, only some dates for the Platinum Members Traders Club on YouTube, the members meeting and Academy live session dates are there for you. And let's now move into the pre-sent questions. And first question comes from Crypto A to Z. Please explain how the S&P 500 after the lows could fit into the reversion to the mean from 2009 lows. That's a very long time ago, with low points, Heikin-Ashi weekly, please, and Renko longer term with fibs. So let's go back to the charts. That's that chart we just looked at there. I haven't gone back to 2009 on the shorter term view. I've put on some regression bands, 2 standard deviation regression trend bands, and got the Bollinger Bands there as well, 2.33 standard deviations and 50 period, for to capture most of the price action range. And mean reverting, we're looking for them to hit the edges of these bands and then bounce back to the middle mean. As you can see, I've got a more medium term one that goes back to the start of last year, 22, and I've got this shorter term one for when the start of the uptrend occurred. And if you're talking current price in this trend, well, it's pulled back. Let's just highlight that a bit better. Pulled back from the mean area. Notice how it coincided with the crossing of that, both that sort of longer term downtrend there and the uptrend in those 2 standard deviation regression bands, and then pulled back to the mean and actually gone through that, and now moving towards the bottom band, and that's also sitting. You can just see there that faint line, that's that middle Bollinger Band. So it has pulled back to the mean of the Bollinger Bands. You can see the top of the Bollinger Bands also there, and if it breaks that 200 moving average, which is the white line, then we'll go back to this longer regression band around about 3,780, 3,800 sort of area. But we can just switch it to the weekly chart to take it back a real long way. Let's get rid of the drawings on there that we've done so far. So we're talking 2009. Don't even think I'm going to squeeze all of that into one chart. It's going to be tight for a weekly chart. So Crypto Aid says to the lows here. Okay, so let's do that same regression round. So I'm going to take the low there, March 2009, take it to the current price, draw that on. There's the trend, and we're actually slap bang in the middle of the 2 standard deviation regression band there. In terms of the Bollinger Bands, also a very similar story. So that yellow line, that's the middle of it. There it is, slap bang in there. So we are, as expected, the mean reverting. So there's no longer term mean reverting to go there. The price, as you can see, pulled back from those highs and it's now been trailing along the longer term mean, and also mentioned Fibonacci's in there as well. I think, well, pivot points. I know we did talk about Fibonacci's. So highs to the lows, down to there. Let's just colour them in. We're trying to colour them in. Let's see if we can click on that. No. Let's do it a different way. I think this will need changing colour as well. But it's easier to spot. Let's just quickly do the colours. Have a little drawing session. Just to see what we can get. Pivots I don't really use for this length of time. You could put weekly or monthly pivots on it, but this sort of range I'd be looking at the Fibonacci and also breaking it down into short term, medium term, longer term to see where there is any, you know, mixing of the different time periods to sort of give me an idea of where those key levels were. So we've drawn on the Fibonacci and we have a long one at 3900 coming through that mean area as well. So very strong area of price action, 3900. So hopefully we can see some sort of support for it to bounce on upwards to the higher ends of those bands that you can see there. So hope that answered the question, Crypto A to Z there. And another question from Crypto A to Z, talking about market order flow. And first of all, for those that don't know, what is it? It's basically you're reading the tape, you're watching orders of whatever market you're looking at. The professional players maybe putting their trades in and just seeing if there's any anomalies or big action, and you're putting your trades on around what you're seeing, you know. And like I said, it's what we call reading the tape. Now the question is, what online website tools can a trader use? Well, it's very limited actually. You're probably going to need level 2 data to be able to achieve, you know, the real essence of market order flow trading, and that's not available on TradingView. There are some things available on TradingView. You also got to remember, you're not going to get this on Forex. It's going to be stocks and futures when you're doing market order flow trading, so you know, beware of that as well. Now, what I did have a play around with and came up with something here is closest I could find to doing some type of market, well, it's not really market order flow because I'm watching not watching the ladders of the orders coming in and out, but I put together this type of volume VWAP type, you know, it's volume weighted by the average price type strategy. That's that white line there, and that's quite popular for understanding, you know, the average price, because it's looking at volume and price together and coming up with an average. And a lot of the big, you know, banks, institutions will use this when they're day trading to get in and out of trades. And it sort of leads on to the third question there. Can a trader combine market order flow together with VRVP, you know, volume profiles? So here I've put together the VWAP and the volume at price, which you can see here on the right, it's fixed. And just I've got 4 stocks here. I've got Tesla, Apple, Meta and Coinbase. And the thing with VWAP is that, there's so many different ways of using it. People will use it if they go up through it, they might buy it. It goes down through it, they might sell it. They might do the reverse, if they're trying to get out of position. They might use these bands that you can see shaded here, as a breakout type strategy. So there's loads to do there. And really, for market flow, volume, that sort of thing, that's about the only thing I could really find on TradingView. If you've got the money, then trading platforms like Bloomberg and maybe CQG, eSignal might give you that level 2 data, or some more specific to the stock market or futures market. But on TradingView, it's limited. And I did check down in what sort of extra data you can get, and futures, mostly American market, the stocks, for example, I had a look down and couldn't really see any level 2 data, live data. And remember, this is intraday trading, very important to get accurate data. So nothing really there other than what I put together in that strategy, look there. So it's time for your live questions. So I'm going to give you a few minutes to start typing, put pen to paper and send them in to the chat section. But while we do that, I'm just going to take you through the Platinum Traders Club on YouTube that we also run, and just to make you aware of what it is and what it's about. You can find it at the top of the home page there for the TheStopHunter. You hit the join button and it's going to give you a drop down of what's available, how much it costs, the perks of the club. And I'm just going to quickly show you and take you through them. So we get a weekly market trading report. I'm going to analyse the markets for the week ahead, putting in trade ideas and analysis. It covers stocks, indices, cryptos, forex and commodities. And like I said, be available to you Monday morning. We have a individual platinum members monthly live webinar meeting, so you get to spend more time, and it's a more personal interaction where you can actually speak to other members and me in that session about how you've been getting on, questions you got burning to ask, and hopefully we can all thrash them out in that session. Then we got big discount on one-to-one coaching with me, 40% if you're a member there. Traders Academy, once a month I do a live session of a specific topic, and hopefully you can learn and use that. And also we've got a Telegram group exclusive to the club there, and in that, trading signals, daily trade ideas, chat, any questions, like I said, just randomly off the top of your head that you want talking about inside that community, then that's the place to be. So quite a lot for just £22 a month. So that's the TheStopHunter Trades Club. You can find it in that join button on the YouTube channel. Now let's get back to those questions. Let's find out exactly if there's anything lurking. Right, so we've got CR, what is your opinion with these funded account prop firms? I've seen a lot advertised, like Top Step, for example. That's a very good question, and it's something I have been exploring. Now, a lot of them, I would say, are, well, not quite as good as they seem. Often it requires a lot of upfront cost from you in terms of passing a course or joining their world, and often when you actually call it a qualification, you won't be given that much money anyway, and the rules will be so tight on your trading that you could get easily knocked out very quickly, and basically you've lost your call it your deposit from your learning, that joining fee, and you're none the better. It is a very difficult thing to master, and being a prop trader, very difficult, because often they don't give you very big drawdowns. So like I said, very tight risk limits. It's a very tough thing to do well at. Like I say, unfortunately the good ones are spoilt by the many bad ones out there. I'm not really come across any ones that have really floated my boat of interest to explore further. I'm sure there are some out there, and if anyone knows about them, fire them out, in the chat and let us know. But it's an interesting one because it sounds very good, but I think it's going to be very hard work, costly mostly. I'm trying to find one that actually offers it for free, the service, gets you on board and tests you out properly like a proper job. But I guess that's the way that sort of scheme works. So very interesting. Anyone else out there that some news or experience of them, let us know. Other questions. Right, S&P 500. Do you think the price will drop to the highs of the COVID crash from 2020? There's also a fib line at support there. I don't really make predictions like that. I just trade what the charts say, trade what you see. That's one of my rules, and at the moment, it could go either way. I'm hoping for a more bullish year, and I wouldn't like it to collapse on down. There's a lot of potential upside in there and a lot of good value in a lot of the stocks out there at the moment, but there's global economic and political stuff going on, China, Russia, Ukraine, that sort of thing, that could easily see that spiral downwards. So I'm not going to make a call on that falling back to those lows. I'm just going to trade, like I say, what I see, and when my signals tell me to be long or short, I'm going to be long or short. When combining a 2-chart layout, left one-day hike in ASHI, what Renko setting would a trader use for S&P and Bitcoin? Again, it really depends on your strategy for the Renko block size. The smaller the block size, the more volatile the block action, and the faster you're going to have to be. Like the S&P, I've got 10, 20, 30, $40 block sizes, all based around different strategy ideas and tools and ways in, and so it's given me constant action. So you can create a very good trading system just off one market by changing the block size. Renko, for Bitcoin, at the moment I think I'm using 300 and 600, something like that, and again that will change with the volatility of that market, and I'll make that assessment either on big moves or over a fixed period of time to readjust the block sizes as well. So that's for those two. Do you like to use indicators, or you use price action techniques, and if possible to be profitable using just indicators alone? I suppose I use a lot of indicators to support the price action, and if I am, say, just using price action or even just a few indicators on top of that, I'm looking for also independent data to quantify my decision making. For example, it might be volatility, it might be volume, it might be some sentiment gauge like a currency strength, or the VIX index, which is volatility based commitment of traders. I put combinations together and test them to see whether they work or not. That VWAP strategy that you saw on there earlier that we went through, there was no indicators on there other than that VWAP pivot points to hit a target. So I suppose there's some indicator on there as well. So I'm pretty much more an indicator man. It's not to say you can't make money just trading price action alone. It's not what I majorly focus on, but saying that, Renko charts are all about price action, not time. But I do support that with indicators. I couldn't use Renko charts just on their own. You'd get whipsawed about, and it would just be a mess, and it's something I can't do. Do you prefer to use one fixed profit target, or use scaling and trailing your stop loss as price is keep getting to your partial targets? Good question. I have an initial stop loss, and then I mostly trail my stops up based on Depending on the chart type I'm using, if it's Renko, for example, I trail it up behind bands. A Heikin-Ashi chart, I might use something like the Darvas box to trail it up. The important thing there is, though, you must have a systematic approach to your stop loss, trade management. You've got to make it as systematic and as automated as you would about getting in and out of the trade, because if you keep tinkering with many ideas at the same time, then you're never going to give you the strategy the chance to work. You're going to get skewed results that are meaningless. You might be winning or losing. You're not going to help yourself by not trying to create a systematic approach to that as possible. So I take it very seriously, that part of the trading game, the trade management. Like I said, I have a load of rules depending on what strategies I'm looking at, and I stick to them because it's the only way of measuring success or failure. What do I think about natural gas? Well, we looked at that earlier. Now, if you check out the YouTube channel, I did do a big video on it earlier in the week. You can find that on the home page. Basically said in there that it's still got the potential to move down slightly. There's still 1.5, the early ones that it could go to, but so much talk is there at the moment on buying the dip, the FOMO thing. So you might see an increase, but I don't think it's going to go back to those highs that we saw a year ago. I think maybe $4 or $5 is a good upside target if you are bullish. At the moment, I'm more neutral. I'm waiting for the correct signals, the information to play out for whether I go long or short. You can see at the moment from the charts it's tailed out, flattened the price. Like I say, I'm sitting on my hands waiting for the right time, and at the moment I don't think it's quite there. Day trading nat gas is very lively and very dangerous unless you've got a very, very strong trading model and risk management process in place. It's a tricky one to trade, so be careful if you're day trading it. That's why I wait for a longer term price action. What else have we got? Can a trader trade only Renko? No candlestick, no Heikin-Ashi, no bars, no other chart types. You could only trade Renko. You could draw trend lines on there, use things like Fibonacci, pivot points, other, I call them price action tools, things that indicators that aren't under the chart, like you might put a stochastic on there or RSI or something like that. Just buying and selling the different changes in the block sizes, I can tell you, you would be a loser overall. It just wouldn't work like that. Going red, green, red, green, whatever it is, it wouldn't work. So you need some supporting tools and you need a plan around what you're doing there. I think, actually, looking at that, we've come to the end of the questions so far. Anything else from anyone? I hope I haven't missed anything. I might have, because there's a lot of comments coming in there. I think I've gone through as much as I could see. Do we have anything else on the list of questions? Now's your chance. I'll give you a few seconds, and then oh, here we go. I watched a lot of your videos, and here comes a question about the automated trading. Do you use fully automated systems, or you make a bot that just sends you signals and then you set trades? Another good question from Vlad there. Both, actually. In crypto world, I'm almost fully automated, and I trade, it could even be hundreds, if not thousands of times a day, just eking out little bits of profit. I'm not really a long-term hodl type guy in crypto world, so I would say that's, and it's also easier to automate that stuff. And then Renko, say, is I have a fully automated system, but I also have a system that gives me trade signals and allows me then to decide, you know, be the final person to push the button to whether to do it or ignore it. Other markets, for example, running stuff through MT5 with EA, things that I've built. It's a blend. I do like the systematic automated trading. It does save me a lot of time because I'm trying to do all these videos and other stuff. So I like to free up as much time as I can, and with all the experience I've had in all the different markets, it makes it easier to put those things together. So I'd say it's a complete blend. And then sometimes I just like to go back old school and, you know, trade for yourself just to test myself and play around and, you know, bring back the fun side of trading, make me sweat a bit and see what I can still do. So really it's a complete blend across all different markets. But I'm a multi-asset trader, so I'll be trading crypto, stocks, Forex, stock market, you know, indexes, commodities, the whole lot. So good question there, Vlad. I think that could be it. Last chance for any other questions. I'll give you another few seconds and then we will call it an evening. Now don't forget again that Traders Club, Platinum Traders Club on YouTube. I think it's great value, and we can do, you know, so much more like this in the space of the Telegram group, and other members will tell you that's the sort of thing we do. And it also gives you a chance to, you know, get involved in more live stream sessions like this and get into the content strategy ideas, all that sort of thing. So, you know, give it a go for a month, see if you like it or not. I think it's worth the time, and if you're serious about trading, then it's certainly worth a look. So I can't see any more questions coming in, so it's late over here in the UK. It's just gone 8 o'clock. I need to get home for my dinner, and just flashing up on the screen now the next session, 29th March, 7:30. Quite a few weeks to go there, it seems, till we get there, but I'm sure it will fly by. So just to say thank you all for joining tonight, and I look forward to seeing you next month. So have a good, successful trading month, and I'll speak to you soon. Thank you.